Happy Monday. Welcome to the Pulver Report. It is Monday the 31st of May. How's everybody doing out there today? Let's go ahead and get started. We have a pretty busy week ahead. It's officially the last trading day, even though it's a limited trading day with the holiday. We still have the Forex market open. We still have cryptos open, but Wall Street is closed for the day. So we're going to take a look at some stocks, options, futures, Forex, cryptos, take a look at everything today as usual. And like I told everyone last week, I'm still going to run the Pulver Report today to get ready for the week. Even though it's going to be a shortened holiday week, we still have a busy trading session ahead. So nice to be with everybody. Good morning. Hey, Chris, how are you? Not talking to myself. That's Chris B coming in. All right, let's go ahead and get to it. I've got a couple announcements. I want to get into the risk disclaimer really quickly before we show any charts. So you understand there's risk in trading. Please then always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, Forex, cryptocurrencies, whatever that asset class is, understand those risks, please. I am going to be joining Casey Stubbs and the team at 8cap in a trading battle on Friday, June 4th. All of you are welcome to join me. You can log into their website here, thetradingbattle.com. I'll go ahead and post this in the chat as well. So thetradingbattle.com, there it is in the chat. If you click on the link and go to watch now, you can register for the session. That is Friday, June 4th. It is going to be 8:15 a.m. Eastern time. So it's going to be right before non-farm payroll officially hits the news breaks at 8:30 a.m. We also have CAD employment news at the same time. So Casey and myself will be looking to trade against each other. It's a little bit of a trading battle face-off. And we're looking to see who reigns supreme for that particular session, so you can make the most pips, the most dollars, and should be a lot of fun. So check that out. We did that not too long ago. I did that with Blake Morrow. That was an awesome session, so I'm looking forward to doing it again, and hopefully all you can attend. That will be in place of my Pulver Report on Friday the 4th. So just so you know, I'll be in this session, the trading battle, from like 8:15 to probably 9:15, 9:30. And if we do have time to come into the Pulver Report, we might, but it's going to be probably too close time-wise. So I'm just going to have this serve as that little Friday morning session, just so you know. All right, so let's get into the charts this morning. I want to take a look at a couple of things. So reading up on where things are at. So again, we are officially closing out the month of May today. The old saying, sell in May, go away, doesn't seem to be applicable here. The markets are, for the most part, continuing to rock and roll. In fact, I'm going to look at, I've got a StockTwits email that I just took a look at like 20 minutes ago. And we're starting to see everything, still pop into the upside. Take a look at the IWM. I had Ford up here. Ford is, by the way, at a multi-year high. We're at like a 6-year high on Ford, around $14.53. Technically, I am in Ford since around $4.50 and still holding. I have a chart alarm set up here around $17.50. Now, do I think we can get there? Definitely. Do I think that we should have a pullback first? Possibly. But the last time I started to notice, okay, I'm getting some overbought conditions. I had some overbought conditions here and here and here. Now, I do think that a pullback is coming in Ford. Now, the question that I'm asking is, are we going to do the following? Are we going to be seeing, this really strong support around $4, head up into $16, and then still see a range on Ford? Or will we actually start to see, these highs back in, this is talking late 90s, early 2000s. Will we actually break this structure, which again, we have to clear around $18 in Ford? If Ford can clear $18, there's really nothing stopping it until probably $24. But because I've got a pretty strong position in around $4.50, if we get up towards $18 or $17, this chart alarm activates at these previous highs. I'm looking to protect some of those profits. The IWM trade that we are in for equities on demand, we are looking for this to continue to do fairly well. Question is it going to go up or down? So we had a decent move to the upside last week. We're at 225.50 on the IWM. Question is, are we going to come back up, tap these recent highs, or start to give it back and tap these recent lows? Either way, we're going to be looking at this trade for sure this week. We have one of our strategies called the Master Blaster, which is a directionally neutral strategy. As long as we have some price movement, we make some pretty good profits on this. So IWM, hopefully, will be able to pay us at least on the call side if we hit those 230 and 231 levels. I believe we're in. I can check our trade here really quickly. Master Blaster, we are in the IWM at, I'm just going to check the call side right here. Are at the money on the 222s. Okay, so if we're at 222 and we get up to 231, that's going to be about $9 of intrinsic value. Our cost in this trade was around $10. I am in the IWM at $10.50. So hopefully between the two legs combined, we can get something between, $11.50 to $12 of total credit. Or I should say, close it out for $12 credit, have a $1.50 or so of total profit. Again, chart alarms are set on the IWM. We have a lot of these trades running, so just real quick in our, let me change my screen here. So really quickly, just so you know, if anybody is with us, I see a lot of familiar names in the session today for Equities on Demand. Our Master Blaster strategy to me, is one of our top strategies right now, with the market still willing to move, but both myself and Tyson are in agreement that we're not really convinced that it's nothing but a bull market right now. At the same token, we have seen predominantly after a bit of a flush out last week, the week before. I mean, I think crypto's brought the overall markets down just a little bit. We're going to take a look at some cryptos here in just a moment. But when we see that we're sitting near multi-year highs, when we're sitting at overbought conditions, we see that the market's overstretched and long in the tooth. That's fine. But the market can remain irrational longer. So we still see stocks go higher. We have some massive movers and runners this year. I mean, I don't know if anyone was watching this week. We got those popular meme stocks, right? GameStop had a crazy good week. Now, this is a daily candle, which shows it lost a little bit of that pop this last week. But take a look at this weekly candle. You've had GameStop for the most part. I'll show you the chart here in just a second. There we go. So GameStop has pretty much been asleep for the last probably 2 months. So let's go back in time. Obviously, it's been really exciting, really volatile, and Roaring Kitty out there is probably like loving this this little move up towards 272. But will we ever return to 350? Will we ever return to 480? I have no idea. And truthfully, I don't intend to hold GameStop in any capacity to try to see if those highs are ever tested. What I want to do is trade this like a Master Blaster trade. I want to trade this where if it's going to be volatile, let's take advantage of that volatility. And so 1, 2, 3, 4, 5, 6, 7, 8 weeks in 8 weeks in a row, very dormant, very little movement, and then boom, big move to the upside last week. We had a low around 160. Let me read it at the top here. So low was 173.35 and the high was 268.80. So we got all the way up towards 268 last week. I mean, that's a big move. Let's say 174 to 268. What is that? So 268 minus 174, that's a $94 move, and our base is 174. We're talking about a 54% move just last week from low to high of the candle. Now, granted, it didn't close at that high, so we had about a 50% move, and then we gave about half of that back. So you can see here on the daily chart that GameStop did aggressively close on Friday last week, bearish. And I'm sure that this was a bit of a pump to the upside and lots of profits being taken. We haven't seen that type of volatility in about 8 weeks. So it makes sense that anybody that's been holding here from the base around 140, 150 had a good chunk of profit. Another one that made headlines that we should all be fairly familiar with is AMC. I actually had AMC holding from the high octane alerts back in, let me check the spreadsheet here. AMC, we had that one in the spreadsheet back in February. We were long at $6.71 in February, took profit on that right up here the day before. So this is Thursday when we popped up here above $25. So that's another massive win. We had a couple of good runs here. We bought it around $2, took profit just shy of 20, bought back in around $6, took profit with this little move. Again, I have no interest in holding these long term. I know that theaters are opening back up. I know the AMC does have some extra cash now at their disposal, but they also they still have this incredible short interest float. So there's still a heavy short interest on stocks like this. I wouldn't be surprised if we see more big squeezes to the upside in some of these plays, because right now I think one of the worst things you could do is be directionally biased short. Now, granted, we have some strategies in equities on demand that we're talking about, bear call spreads, which means if we put in a top, we don't mind being short at a certain level. But again, risk is already predetermined. If it stays below a price point, we make full credit. If it doesn't, we lose the trade. So, probabilities of a multi-year high, multi-month high, overbought conditions, staying below a certain level, pretty decent. But again, we have to see what those scans look like to find those trades. But if there is a heavy short interest flow on these stocks, that's where you start to see these ridiculous runs to the upside. So, I wouldn't be surprised. I don't know how many, hedge funds were busted up from watching AMC squeeze and explode from $10 up to $26. I don't know how many people have been short on GameStop and then get crushed when it goes to $270 again. But that's not my play. I think that if you're going to trade, it's nice to be directionally neutral, take advantage of the volatility because we're certainly getting in the stock market, and take your wins. So we'll see how this week unfolds. We have a lot of Master Blaster strategies still running and lots to manage this week. We're going to have a new set of power plays as well. We have some bull put spreads we're looking at. We also have some bear call spreads we're looking at. We'll take a look at those today, or actually tomorrow in class, not today. But we have about 1, 2, 3, 4, 5. We have about 12 trades or so we're going to try to get into this week for that. And then we're still managing a solid 10 trades in Master Blaster. So it's going to be a busy week in equities on demand. I'd like to switch gears here into cryptos for a moment. Let's go to Bitcoin. We are sitting at 36,892 for the old crypto. So Bitcoin still fairly sideways. Chart alarms are set. As I'd mentioned, I'm looking for a base level. Even if we come back and test 30K, the chart alarm is set right there. In fact, this low is $30,200. So if Bitcoin hits this level, I'm looking to buy. Another way I'm trading this is GBTC. If it strikes this chart alarm here around $28, I'm looking to buy a small portion of GBTC and another one at the yearly pivot around $24. So I like both of those. Ethereum. Ethereum's at 2542. I am back in Ethereum at 1850, adding to my cost around $400 from back in 2019. So again, is this over? I don't think so. High, low, maybe some type of correction in here. One more flush down possibly coming in cryptos. Not sure, but I remain patient. I'm still holding positions from here. If this level's tested, at this yearly pivot, ideally, I'd like to see Ethereum if we can get it, and maybe we don't. But if I could get Ethereum at $1,000, I would love to add more to Ethereum long term. Litecoin's all the way down to 182. I did add to Litecoin around 120. That was a limit buy that was filled, and still holding Litecoin around $50 as well from those 2019 lows. Reload here at $120 and another one sitting at 100. That is a long-term hold for me on Litecoin with those levels. Again, if my break even is around $80, $90, $100 and we have highs around 418 or 414, that's a pretty good risk to reward, even if zero is a potential, result. So, and I keep saying this. I want you all to realize that, remember that crypto's super volatile, tons of risk, and zero is a very distinct possibility. So, whatever you're willing to allocate or whatever, I decided to allocate is finite. I know that I could completely lose it all. And at the same time, maybe that little bit of finite capital becomes a lot of profits. So we'll see how it all shakes out. But I would say right now, because there's not a lot of surprise movement to the upside, things are going to slow down a little bit in cryptos. We might have a bit of a slow summer, but let's find out. We'll keep watching. I've got chart alarms set on all these major cryptos to see where's a recent high, where's a recent low. If we're hitting recent lows, I'm interested in adding more. If we start hitting some highs, then maybe I start looking at that structure to see, are we creating some bullish patterns? If this is a big flush down and we have a reversal pattern, maybe this looks a lot like those stocks in 2020 with the COVID crash. We might have a cup and handle. We might have a double bottom, right? We could see that, maybe a slightly oversold condition becomes divergent and we have this thing build a base and start working back up. But I think a lot of these cryptos are going to take some time to do that. Okay. Let's see here. Keo says, can you tell me how to trade pockets, bullish and bearish, please? Keo, are you in my flex room by chance? Because you're asking for a very specific lesson. I have an entire class dedicated to pockets. If you're in my flex room, I have probably a 20-minute video that's all about pockets. You can check that out. In fact, I think maybe I didn't do that. Maybe what I can do is I'll add that to my Keep It Seriously Simple video series. I can do one on pockets, maybe like a 10-15-minute video on that. I do have one coming on Options 101. I have one coming on FX scalping, Forex scalping strategies that I still use and like to trade. but I can throw one in there for pockets as well. I do have a bonus video inside my Flex trading room. So if that's what you're asking, but I'm not going to, teach that right now in a little live session for the Pulver report. But pockets are awesome. In fact, I'm still looking. I want to transition back into Forex here for a moment. So Aussie New Zealand, this is a pocket that I would happily start building around. We had this news reaction from last week with the RBNZ keep the official cash rate the same at 0.25%. They didn't really say anything different. I am in around 106.30 on this Aussie New Zealand, and I've got chart alarm set here back at these pocket levels around 107. So if we see, if you're in that flex room, then take a look at that flex doc, that dashboard. There is a bonus archive tab. Check that out. There's a bonus video for you just dedicated to pockets. So you can check that out right now. Okay, for this pocket on the Aussie New Zealand, I'm trading it back towards 107. Now, I've told traders this. We did recently break this structure here, so we might have this market come back and retest. Now, if it tests this level, I'm going to take some profit on this little long trade. And then what's going to be interesting is if we end up breaking, let me use a straight line. If we end up, how's that for a straight line? If we end up breaking right here, break, retest, and then look to see if there's a continuation to the downside. All right. Now, if that's not the case, and we've seen, some tricky breakouts and fake outs here on the Aussie New Zealand recently. So maybe we end up coming back up into this area. Let's say we get back above 107. Well, if this ends up closing back up above 107.50 to 108, I think this is a fake out to the downside. All right. And the reason I'm not convinced that the Aussie New Zealand is going to go down further for right now is as we officially wrap up the month of May, unless this week, and I'll say this on the Aussie New Zealand, unless this week, this currency pair drops more to continue to drift lower through the summer. And so maybe this is destined to drop through June and into July, and we start to see this August, September bottom, and we start to trade this all the way back up to 107 or more. All right. So I outlined a scenario last week in my Flex trading room where I don't care what side of the trade you're on, just have a plan. For me, I have a robot that has been buying some small levels. I'm looking to get back to 107 and take some profit. If this falls, 107 remains my profit target, and I'll just add more at bigger levels that are spaced out and then add to my winning position when this is all said and done going back to 107. Okay, so I'll see how that plays out. It's going to take time. I might have to sit on this trade for a couple of months. But if this week price pulls back to 107, I'm going to take some profit, and all of a sudden this pocket is filled and it's done. So it's going to be something I'm going to have to look past and go find another trade. But if it's available, then I'm going to start building, some pretty big levels around this Aussie New Zealand and say 107 is a great level to take it back to. We have a couple more levels too on pockets. Speaking of pockets, dollar Swiss. Okay, dollar Swiss. I mean, this is dollar index related. So before we get to dollar Swiss, let's talk dollar index here. Okay, dollar index. We had a bit of a fake out. Interesting. I know a lot of you were with me last week, right? Last week on Thursday for the Flex Room. Last week on Friday for the Pulver report. Look at the candle from last Friday. Okay, again, Forex is open today, so the markets are still moving. The dollar was right up here. We had this big bullish candle on the dollar, and look at this massive rejection. So we're still not in the clear for this dollar to have any strength. We might see that it comes back down into these levels and gets retested. If we spend a little bit more time, this is one thing that's really interesting about going into summer trading. We finish up today officially the month of May. We have this first week in June. We have non-farm payroll on Friday, so you can join me for that trading battle. But how does this week close? If this week closes with any more bullishness, then we're starting to talk about this confirmation of the dollar showing some bullishness. If it stays inside here, if the dollar continues to get hit hard, it's not a surprise to see it come back and get tested. Test these lows back in March. Test those lows on the DXY back in January. It wouldn't be surprising to see that technically. But keep this trend line in mind. If this trend line gets broken, if we spend some time on the right-hand side of this trend line, I am looking for at least that type of move. With this level and this yearly pivot and this, 5-way, all these technical things. Oversold, divergence, 5-way moves, pivot, pockets, you name it. To the upside, it looks pretty strong for the dollar. And again, I know that right now this is probably a contrarian trade. I said this last week. Most traders out there that are following think that the dollar is doomed for more weakness. And, I can see why. But that's not my stance. I think that right now it's a crowded trade to the downside. I can see that the dollar may start to look like, oh, here we go. We're breaking down here, but I could see the dollar putting in some sharp lows and coming back up with a fake out type trade. So I think that the dollar shorts are pretty heavy. I think that, again, bigger money tends to trade against the retail crowd. So if most people are short on the dollar, we'll see if that ends up playing out the way I like. And again, I'm basing it all on technicals. So we'll see how it plays out. Okay, so anything on the dollar index here, the right side of the trend line is absolutely needed. Anything on the DXY, okay, DXY, same thing, right side of the trend line is absolutely needed. I'm looking to see how we can build off of this. If we can build on the right side of the trend line, maybe a bullish pattern emerges. We take it back to the highs, take it back to the yearly pivot, come back to these levels as well. But price action is going to be key on this dollar. So that leads me back to the dollar Swiss. What am I looking for here? I need to see a trend line break. Until the dollar Swiss is over on the right-hand side of the trend line, this is just really slow, and the dollar continues to melt back down. Can we come back and tap these lows on the dollar Swiss? Yep, just like we could tap the highs in the euro dollar. Take a look at this currency pair. Euro dollar, same thing. If I draw a trend line here on the euro dollar, have we broken it yet? Nope. So this is why I want to see that confirmation. We have highs from this year around 2,300. We have highs back in 2018 around 2,550. Take a look at this if I squeeze back. Highs up here around 2,550 from 2018. So could we see this level tested on the euro dollar? Yep. Could we see this level tested on the euro dollar? Yep. Could this be where the top is forming on the euro dollar? Technically, it makes a lot of sense to me. So could it go up here, back down, up here, back down, up here, back down? Could we have this large rising wedge on the euro dollar and then it drops? Sure. It's going to take time, but again, we'll monitor this and follow it every step of the way. All right, let's take a quick look at a couple more. I like New Zealand dollar to the downside. We're at 7268. I'm still looking for this one to, pan out to the downside towards 7,000 or lower. If that is a trade that looks like this, for example, if we have this, a bit of a rising wedge, maybe this is really slow for this week. We'll find out if non-farm payroll breaks it loose. Maybe it comes up, retests the high, and then comes back down to the low. Okay, again, technically, I'm just looking for this to balance. We still have a pivot cluster in here. We have weekly pivot, monthly pivot, past resistance becoming support around 6,800. And also, we have this amazing bar count with one of my systems, Right Trader, which just means we're overstretched. We haven't really balanced this trend in a while. So between the New Zealand dollar and the Aussie dollar, I'm looking for this one to at least make some type of move back into the same lows or slightly lower lows. Past resistance becomes support around 74. Okay, so it's been a slow grind. And then you also talk about slow dollar CAD. Can we build a base? Can we build a base around 1.20 on dollar CAD? Can we make our way back to this outer trend line? And if so, 2,600 is right here. These previous highs. This is what I would like to see. I have a chart alarm set above and below on the dollar CAD. I'm watching this one really carefully. This is one that I want to be fairly aggressive to adding towards. If we can get back up towards 2,400, that to me is step one. If we come up to 2,600, I think we're going to start building a bottom. So this capitulation move, we could have a 1, 2, 3 wave move to the upside towards 26, or we might have a 1, 2, 3 wave move, to or through 1.2600. And then the question is this enough to build off the right side of the trend line? This would be the left side. This would be the right side. Can we actually build a bottom on the dollar CAD and see this thing get back into that yearly pivot? See this thing get back into past support, become a resistance around 1.30. Okay, so earlier this year, I was very certain that we're getting back to 1.30. Now, I'm not saying that we can't get back to 1.30, but I'm more keen on 1.26, safely take some profits, and move on and look for other trades in the Forex world. Okay, a couple other trades out there. I want to check some yens really quickly for today. Aussie yen, fairly sideways, still watching. Does this structure end up breaking down at all? Right in here. Do we break this structure in any capacity? Maybe some rising wedge material on the Aussie yen. If we have a breakdown, let's come back and retest the lows. Let's see if the Aussie yen can get back to 82.50, 8200, anything at past resistance levels at 8100. Come on. The technicals look good. but it is a yen pair. It can be pretty messy. Swiss yen, this is one that I'm particularly in as well, looking for something aggressive. If we can aggressively break this trend line and start working our way back down, 119 would be great. Ideally, we start to come back down into 116. If 116 is broken along with this trend line, I think Swiss yen has a much bigger trade coming to the downside. But maybe the alignment there might be dollar, let's see. Dollar Swiss has to start going to the upside. Swiss yen has to start coming to the downside. Maybe we have to see another period like we saw earlier this year with the Euro Swiss. This run on the Euro Swiss from February into March, it was like what, a month? We had about a month move on the Euro Swiss and the Dollar Swiss, which just was awesome trading. And we were long on Euro Swiss, and we made a lot of profits here, made a lot of profits there, and we're looking for one more move to the upside there. So Euro Swiss hopefully continues to give us some move to the upside. Dollar Swiss would be great as well. I see a question there. Don is saying Euro New Zealand. Sure, Don, I'll take a look at that for you. Euro New Zealand. This one, we still have resistance around 70000. 1.7050 was the recent highs. We have this amazing harmonic pattern, which should allow price to get back to like 7150. I think it's going to continue to do this, Don. I think we still have this. Let's just go parallel on that. Something like this for a corrective look. What I was planning on, and so just so you know, I did turn off my price action pro robot. So we had this move, we took some profit, we bought in more. We had this move, we took some profit, we bought in more, we took this move, we took some profit. Now I did close my robot down once we did get above 7,000. Okay. So do I think this trade has the ability to still find equal lows and find equal highs? Sure. We could still jump around here a little bit. So I do like buying these lows again. If we revisit these levels, I like buying those lows and try to target 1.70 or higher. I think this is more of a range trade. The way this looks to me, let's take a look at the 1 hour chart. We have some news pockets from last week right in here. So can we see this news pocket right here? This was the RBNZ rate decision. That's, really nice structure. The market's coming right back in to chew up some of this pocket. This is where the pocket starts. This is essentially the touch of the pocket right in here. And this area is the close of the pocket. So if we go up into here, come back down for a slightly higher low, I still like Euro New Zealand heading back up to find the rest of that pocket and possibly come all the way back up to these highs at 1.70. So I think it's still a range trade. And let me look at the 4 hour chart. Okay. Look left on your chart. Look left right here. There's really strong support. There's also support. There's also support. And so we did set up a trade like this in the Flex trading room where we had a small buy, level 1. We had a small buy, level 2. We had a small buy, level 3. And our target was this pocket at 1.70 and the highs. So, we're going after something like this, like this, like this. And we're just going to keep looking at these potential range levels for the Euro New Zealand to come back and find this pocket around 6,900 and try to revisit these highs at 7,000. Make sense? Okay. Anything else? I'm trying to think. New Zealand CAD. I've got some perfect storm running in New Zealand CAD. This one made, I closed out for about 500 pips of profit right here. Took a little 30 pip trade on the active storm. The Aussie CAD is not quite out of trouble yet. I'm long in the Aussie CAD with my perfect storm strategy. This one is also looking for something to the upside to try to grab hopefully a net 100 pips. And I'll just let this one continue to trade longer term. I did say that yearly pivot. Keep watching that yearly pivot on Aussie CAD. 92.5 or 0.9250. I do think that coming into this yearly pivot, we could see a strong bounce from there. And the question is, are we going to see, this high to low bounce back up, lower high to lower low, or will we see us hit the pivot, come all the way back up and just see a big range? So it's either going to be a range trade in Aussie CAD, or we'll probably pop back up halfway and then head down one more time. And this could be a topping pattern, right? And we would finish lower, and we have this larger swing from low to high. So all that drawing on the chart looks like this. If all this is a swing from low to high, this is a corrective zone. And we could have a big harmonic pattern that plays out for something more medium term to long term. But I think that Aussie CAD is going to continue sliding down towards 92.50, maybe a little bit lower. But I'm looking to, buy small between 9,200, 92.50, and all the way down towards 9,000. I'm going to start buying, Aussie CAD in that area and try to take it back up towards 95 or 9600. Okay. All right. I like Aussie CAD on that. I also like Aussie Swiss long. It's maybe not ready yet. I probably got in a little bit too early. I'm looking for this past resistance to offer up some support. So I'm looking for Aussie Swiss to start bouncing off of one of these levels and try to take this back up into like 2018, 2017 highs. So I do like Aussie Swiss long. Again, I realize that there's this yearly pivot way the heck down here. This Aussie Swiss might pull back even deeper, but this is a 1, 2, 3. This to me is all corrective wave 4. So I'm still looking for a fifth wave to the upside, and that is where I'm trying to be pretty aggressive on the trend. If we can get Aussie Swiss trend to the north, that would be excellent. Okay. I'm trying to think any other pairs. So dollar CAD watching closely, dollar Swiss watching closely, New Zealand dollar, Aussie dollar, Swiss, Swiss yen I really like. Some of the yen pairs I like. I just need to keep monitoring them. Forex has been pretty slow the last couple of weeks. We saw a little bit of jumps out of the pound crosses. We saw the New Zealand dollar jump last week on the news. Let me see what we have this week for the calendar really quickly. Let's go to forexfactory.com. Take a look at the high impact for the week. I'm just going to go medium and high impact for this week. I know there's non-farm payroll on Friday as we kick off the first week of June. We do have an RBA cash rate decision expected to stay the same at 0.10. That is, well, I guess that's tonight. 12:30 a.m. Eastern time on Tuesday. So Tuesday's first trading day of the week. Forex is still open right now. We do have bank holidays in Europe and the U.S., but Aussie's going to come in strong to kick off the week. We have OPEC meetings this week. We have some speakers out of Bank of England. We have FOMC speakers. We have non-farm ADP precursor on Thursday. Unemployment claims for the U.S. Oil inventories. We have Friday. Big news out of let's see here. Swiss National Bank chairman speaking. Governor Orr speaking from New Zealand's FOMC or non-farm payroll on Friday, along with CAD unemployment. Take a look at the numbers here, just really quickly. We have negative 20K projected for Canada with an 8.2 unemployment rate. That's slightly higher than last month. Average earnings for the U.S. forecasted at 0.2, non-farm numbers at 670, and unemployment expected to get a little bit better as well. We still have around 8 or 9 million jobs in the U.S. that have not been recovered from last year's, COVID crash. So I just take all this information with a grain of salt. But the one thing we can count on, and what I'll be trading in that trading battle, is some decent volatility around the CAD pairs and the dollar pairs. So if you're interested, again, I'd love everyone to join me here on Friday. You can register for this session. Just go to thetradingbattle.com, check it out. We'll start at 8:15 Eastern time on Friday. But what I'm interested in trading are the following pairs. I would like to trade and I'll type this on the screen, Aussie dollar, Euro dollar, pound dollar, New Zealand dollar, dollar CAD. I'll probably stay out of dollar Swiss and dollar yen, but I would also like to look at the EURCAD and the pound CAD. So that is 1, 2, 3, 4, 5, 6, 7 currency pairs that I will be extremely interested in trading and scalping for Friday's news session. So if you'd like to join me, you can see how I do it. Hopefully we have some decent movement and follow through and volatility. And if we get it, I'm hoping I can make a couple hundred pips that day. Okay. EuroCAD. Catherine's asking for EuroCAD. Sure. Let's take a look at that and then I'll start wrapping up the session here. Any other questions for me? EuroCAD, 47.41 is the current price. We do have a price action pro deployment from the Flex Room, still looking to buy in this area. And so if we do see it come back and retest, that's fine. Currently, though, I am long on the EuroCAD and looking for this to get back into 1.51, 1.50 for some profit. What I want to see is this. If we have a pattern that allows the EuroCAD to head back up into 1.58. If we don't, maybe this is high to low. We have one more push to the downside coming. Then we have a falling wedge. Come back and find this low, and then we still see the same move up towards 1.50. So pretty committed to EuroCAD going up towards 1.50. I'm going to continue to stay long in that currency pair. And also in the pound CAD, same thing in the pound CAD, 1.7133 price is moving. Hopefully it is going to break higher. Look at all this indecision we see here on the pound CAD. I would love to see the pound CAD break with a daily. If we can get a daily close above 71.50 and then make our way into this 72, 70. What are you doing, bro? make our way into 72, 72.50. My destination on the pound CAD is up here towards 74. Okay. So pound CAD, EURCAD, I like north. I'm not certain that this is the absolute, gangbuster trade. It's like we might have this head back up here, start to fail, come back down one more time, retest, and then it goes. Maybe it comes back down and retest the low again, and then it goes. But I like the pocket from last week. I love the pocket from last week. In fact, I don't remember what this was from. What was this from? This is April 21st. Okay, that must have been the BOC rate decision. If that is a Wednesday, April 21st, let's go back to last month. Yep, April 21st was a Wednesday. So that was a Bank of Canada rate decision right there. They didn't change the rate or anything, just had some dovish comments. They were talking about potentially, tapering down some of their stimulus package and, acknowledging that in at some point the market's they're going to have to start normalizing interest rates, which is, going to be a really interesting transition for central banks in the next, let's say, 6 to 12 months. I suppose we could forever stay at these lows, but that's not the case because, we from 2012, 13, 14, the great race to the bottom, we had the same thing happening. And then 2015, 16, 17, 18, we had the dollar start looking to phase, or I should say the U.S. Fed starting to phase, tapering back, starting to raise interest rates. And they did that, and all of a sudden we had COVID that just went completely back to resetting and backpedaling into the race to the bottom. So every central bank is still racing to the bottom for now. The question remains, how heated will inflation get? How hyper will inflation get? Because that's where the inevitability of how much faster rates will have to be raised. You're just looking at, the cost of materials across the board, commodities, correlations, just things are running pretty hot right now. So nevertheless, that's a great pocket I'm looking to trade back towards on pound CAD. So I remain long. What would be great is if we can break above this level here and then go up towards 7,500. So, this might be something that surprises us this week. I do think that if we have any pullbacks, if we pull back into this area, and maybe this is around the Friday trading battle, I'm looking to essentially go long on the pound CAD. If we are breaking early in the week and we're long, then I'm going to look to take profit prior to the trading battle on Friday because my destination is up there around 74 to 74.50. Make sense? So, alrighty. I'm going to go ahead and wrap it up there. Monday, happy Memorial Day. Thanks for being with me today. Let's see here. Philip says, why is everyone treating Dogecoin as a joke? I don't know, Chris or Philip, because it doesn't have any real value or use. You can sit there and say like the market cap is so big, but I don't know. If you look at what the project is around Dogecoin, it was created as a joke. So it's different than, taking something like Decentraland or Algo or Bitcoin or Ethereum, like actually having a technology or network around it. Like Dogecoin is not that at all. So I don't know. It's amazing what it has truly been like a trolled or meme-based coin. Again, I'm not going to knock the fact that, there were people that made a ton of profit and turned speculative trading into a fortune from, 5 cents, 10 cents into 60, 70 cents. That's an incredible amount of profit. Now, is it sustainable? I have no idea. Am I in Dogecoin myself personally? I'm not. I'm probably not going to. So, again, anybody that's trading cryptos, like I say, be careful. Anyone that's trading Dogecoin, be careful. I'm not going to say it's better or worse, but I just know that as far as like projects and long-term sustainability, I don't think Dogecoin is that one that has a long-term outlook. I think that, we might see $1 on Dogecoin. We might see also Dogecoin be the reason that cryptos get hurt really badly. If this truly goes to zero, all of a sudden that's going to be a black eye on cryptos and you're going to still see this flush to the downside. But hasn't happened yet. I just say be careful, So, all right, everybody. Have a great rest of your day, right? Happy Monday. Enjoy the holiday. Happy Memorial Day. We'll see y'all this week. It's going to be a busy trading week. I'm looking forward to it. Equities on demand, flex. Let's do our best. Let's have a great week. And hopefully we see the markets responding with some good volatility. Looking forward to seeing some bullishness in the stocks or bearishness. Looking to see some volatility and movement, daily trading ranges in the Forex market. Looking forward to some chart alarms going off this week for some profits. Okay, so thanks for being with me today. Remember, for this video. I appreciate it if you hit the thumbs up button. This goes a long way to help, this video get searched out there on YouTube, and the YouTube algorithm loves it when, traders that come in, let's say we had 100 traders watching today. If 100 people are watching and I have 100 likes, that's a great, saturation for the algorithm to, let this video be seen by other people. So I appreciate that for everyone that's tuning in and watching. Also, make sure, click on thetradingbattle.com. I posted it in the chat. Or go to the website, thetradingbattle.com, and click watch now. You can register for that session on Friday. The Pulver report, we will not be doing a live session on Friday because I will be in this session for the trading battle. So you want to check it out, please do. And I'm looking forward to trading against Casey. I'm also going to be on his podcast in a couple of weeks. So all sorts of fun stuff. But enjoy the rest of your day. Happy Monday. Hopefully the weather's beautiful where you are, wherever you are in the world. And enjoy it. I'll see you all tomorrow in the Flex Room. See you in Equities on Demand. Let's have a great week. Okay, thanks for being with me, traders. Talk to you soon. Bye.